Hello guys, I'm back on my daily analysis for 3xy and today again we'll be looking at our index chart. This is gold. Um, well, I really want to start with the dollar because the king is the dollar. Okay, so what we can see here is okay, so this is the weekly candle. We can see still the fair value gap is being respected as long as the bodies are not closing above this fair value gap. Even in the where it is, yeah. So as long as it's not going that far, I'll be looking for the sell side liquid in the form of this rejection block. I'll ultimately this consequent enforcement of this break. And below that, this is our gap and sell side liquidity low resistance liquid. If we look at this in the monthly time frame, we can see prices just consolidating. So in this environment, trading a higher time frame objective or for a longer term objective, it's gonna be hard. So it's better to uh, trade for the short term and have short targets in your mind. Now, we will rally. Now we can see down candles have been supporting the price. So it is possible if we take out this high, then surely I'll be looking for the high prices. 4 hour rejection block. We are trading in the rejection block in the 4 hour time frame. Down candle, order block. This is also an order block. If this gets traded through, it will act as in support. I think so. But the question is, where's the next round liquidity? That is the most important thing. Every trader want to know every single day if it's trading or session trading or for the short term trading. Where is the next round on liquidity is? Where is the next round liquidity? Now we have taken out this short term high and again this high is being rated. Well, for me to be truth, if we take out this one, I don't think that prices is going to support the price action because we have already traded in the breaker and now we are just consolidating and again coming back to the breaker. If it gets straight through, I think we're gonna just trade the upper side portion. But if we do get support, we have a sell side liquidity pool here, fair value gap here. So I'll be looking at that. Now, down candle. Let me see where's the okay. So we need to see the S&P divergence. I mean, it has not taken out the low. It has also not taken out the high. So if anyone gets trade through this one, and suppose this does not take out those lows, I mean, if take out this lows and reach this favorable gap, and in the DXY it doesn't take out those highs, we can create an S&P divergence here, and then only we can look to sell the market. But we cannot just participate anytime in the market. We should have specific times of the day to participate in the market, and at that time, if you found setup, just trade. Otherwise, just stay sideline and don't participate in the market. That's that's the way I'm thinking. Now let's have a bigger time. I mean, euro dollar. Okay, upper side volume imbalance. This one, upper side volume imbalance. Lower side, we are having a balanced price level. Also, if you look closely, we are having a fair value gap, BC. In that, we have institutional order flow integral, and now we are back inside this candle's middle. I mean, just 50% of this. I mean, just basically the middle portion of this candle. So this market is also consolidating in the monthly. You can see this. But the order flow, the down candles are being supported. In the weekly also you can see higher high, higher low. Now, what I want to see in the price action, I don't want this candles low, the green candles low to be taken out. I don't want to see that. If we are bullish, and the upper portion, these lines, the lines I have marked, they are representing the what they're representing. They are representing the liquidity, the equal highs. Forget about the VIX. Think about the price. If the VIX doesn't exist here, let me show you. What about this? How is it looking now? Are they clearly seeing? Can you see the liquidity clearly? Yeah, because that it is. That's the liquidity is. So Monday's trading, Tuesday's trading, and this is Wednesday. Upside liquidity and downside liquidity is still this range, unfulfilled range. But as the liquidity is suggesting, I want to see higher prices. But the time of the day, I will see with the liquidity is. But But right now, I think this low can be read through, and we can reach up to the consequent, I mean the mean threshold. Consequent reinforcement is used for the X, and the mean threshold is usually used for the candles. So this area can be reached, and then it is possible. What does this line presents? Okay, order block. Okay. Now in this I can say that we've taken out the lows. This whole candles are the order block. We can say that this is the internal liquidity equal highs. We can run the sell side liquidity pool here. That will be in total soup entry, and then we can have a bias take out these low resistance liquidity signatures here. Ultimately, this one and this is also a liquidity pool. So that is the scenario I'm looking at because we've already rejected from the order block, taking out this one. So that can be a scenario. If this gets straight through, I'll be looking at the sell side to fill out some of the range that is left in the weekly time frame that I've already showed you. Now the GPUSD, it looks like it just really wants to rally. It doesn't want to compromise anything. Monday, Tuesday, and now the Wednesday. Down candles are being supported by the price relative equal highs. So I think next round liquidity for this one is the buy side. Down candle is here order block, so we're gonna see in the time of the day if it does support the price and create some kind of damages for the Euro USD and the dollar index, then we're looking at the buys. Otherwise, if it decide it is violated, then we're looking for this lows and this fair value gap as the next target. 1 hour time frame. This just reacted from this breaker, and now we are expanding. It looks like a consolidating market, but it's steadily, not steadily, we can say in a slow manner, but it is expanding, but with very less volume. 15 hour, same thing. Breaker here, expanding, down candles, order block, upside liquidity. Now, now, gold low high 50% already been done. Weekly time frame. I mean the BC, CB, BC, CB, BC, BPR spending upside down liquidity. Down candles sticking on the highs. Down candles are being supported by the price. Um, we have filled this Pavilion gap a little bit, but this is being not fulfilled yet. So take a look at this. Can have a scenario. Fill out this one. Can have that. We did yesterday in the rejection block, and still we are having this range. In the 1 hour time frame, this range is still not fulfilled. But in the 2 hour, that's why I got tricked in the Monday. I had not taken out this trade. I was looking to take out this move, but as it wasn't filled, I will look at this 2 hour time frame. It has filled the Fibonacci gap. I mean the BC, and in the 1 hour, it's just clearly showing that it just more wants to come in this Fibonacci gap. That's why I created a scenario. And a dilemma in mind that either I should take it or not. Ultimately, I didn't take that. I don't have any regret for that because every day, every single day, market presents the market for you. So I'm just trying to build my patience, wait for the setup, and if you are not sure about the setup, then I'm trying to not participate in the market. If you are doing so, you should not. But if you are doing so, you are doing it a less amount so that it doesn't bother you. Sell side liquidity pool, also the Asian range low, equal highs, clear buy side imbalance, sell side inefficiency. So if we take out this lows and reach here, and then we can rally, it will make sense for me. But I don't know what price will do. I'm just waiting for more information. And yeah, clearly upside there's a draw liquidity relative equalize. So looking at the time of the day, if does market provide a setup, then I'll look at trade. And until then, wish you good luck and good trading. I'll come back again tomorrow with the same dollar index analysis and with all the euro, dollar, GBP, USD, and cool little bit. Okay then, see you.